Good weekend, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up, your weekend edition, where we'll look at weekly charts, get the bigger picture on the market, and we'll review the big event of the day. Now, today is Friday, the 6th of October, 2023, and it was jobs report day. And a blowout number, over 360,000 jobs. The market consensus was looking for about 170,000. That's more than double the consensus. The good news is, because the first thing when that headline hit, interest rates soared, the stock market fell hard, everything was coming down. And then as traders dug through the numbers, they started looking at the wages, falling both on year over year, month over month. Next, they took a look at the unemployment rate, held, basically holding. What's going on? More people are entering the workforce, and you're not forced as a company, an individual proprietor, whatever, to pay more money. You're actually paying a little bit less to get those laborers, the new ones coming in. You're not getting the wage increase. We've talked about that. We saw it in the JOLTS number this week that the help wanted had shot up at over 500,000 jobs. The labor turnover, though, is dropping. It's not there. This goes hand in hand. So there's another part to this Goldilocks scenario that we have to look at. Corporations are hiring more, or businesses are. It doesn't have to be a corporation. Somebody's hiring more. Some entity's hiring more. And as they're doing it, what's happened with CPI? Is inflation going up, coming down, or what? We know that we saw a week ago, 2 weeks ago, soaring energy prices. Yet they cratered over the past week, week and a half. And when I say cratered, a 10% drop out of nowhere. That's monstrous in the scope of energy prices. What went on there? Well, lots of little things. Saudi Arabia making a deal with the U.S. for us to help them in arms, defense, and domestic nuclear energy, all if Israel is recognized finally by Saudi Arabia, which gets Israel into the Arab community, and outlier Iran sits out there one more time. This is all something that happened. It broke today in the Wall Street Journal. It's interesting, and the Saudis said if necessary, they'd consider pumping more oil. I think all this was known by somebody on the inside. It's my own guess, but I can't prove it. But boy, when you get the information after the fact and you're wondering, why was energy breaking? Come on. When you look at the U.S. oil rig count, down today sharply. All right. So, as I said, the president can call all these energy guys into the office, which he did 6 weeks ago. We want you to produce more. We can't have gasoline going up and all that. And here's what they do. Yes, Mr. President. Yes, sir. Yes, sir. And they walk out. No increase in refinery runs. We keep cutting the amount of rigs. Today we lost another, I think, 4 net. We are down in a year over 100 rigs across America. You can't say, oh, there are more in the Permian Basin. No, there aren't. They're cutting them everywhere. So it's a mixture of better cars. I really believe that. Better mileage, electric cars coming on, price of fuel higher, people driving less. It's all this thrown into the mix that is helping. And now we're finding maybe, just maybe, that 800,000 barrels a day that the Saudis actually did in September with Russia. Remember, they said production cuts, but they didn't say they were going to increase. Oh, we're still cutting, even though we're producing more. How do you want the grammar to come out? It gets lost in the language translation. You know how that works. Now, how does this fit into the market? Before I go into all the charts, and we will here, I want to bring something up. I did a special report for you. And the report, come on, play right here. There we go. The report is on stock indices. I recorded it on Wednesday. From Wednesday through next week is the key. Have we seen, I don't even know how to say it, have we seen the possibility of a near-term low in the market? What I did is, instead of bar charts that look this way, What I did is I went out and I looked at just seasonal charts, purely seasonal. What happens from October 4th when I recorded right up through the end of November and then into December for the Santa Claus time. So I did it in all the major indices, the Dow, the NASDAQ, the S&P, and the Russell. They're all done there. I stayed away from price counts, monthly charts, weekly charts, did it different. You're going to be shocked. Take a look at it. Do I know if past history is going to do what the future is going to do? I haven't the slightest idea, and I can't even begin to tell you that the past history predicts what the future is. I'm not going down that road, and you know that. But I'm willing to go down the road that we are in a time frame right here, right now, where historically the market magically bottoms out and tries to put on this rally. Does it have to happen? No. Has it happened? On a 30-year, 15, and 5-year basis. You want to see the report? It goes off my website on Monday. I put it out so you can see it also through the weekend. That's it. So how do you get this? You go to iraepstein.com under the word research, or you move your cursor right up to the top here. When you do that, go in. You'll be signing up. By the way, when you sign up, you'll then be on my list to get my other reports as I publish them, because right after this one, I'll be publishing one ideally next week again. There's just so much ground that we have to cover now. And this is what I call the heart of the trading season. Between now and Christmas, things pick up. People are through with the summer. They're doing other things. September's behind us. Colder weather sets in, and people, whatever reason, there's a season. It's like football. There is a season, and the season is here in trading. So let's go to the chart action and just see what we've got on the weekly charts to get a story. Now, one of the things I asked this morning, and I'm going to repeat it. What do you want me to replace WBA with? Write me. Ira Epstein, but it's not my name. It's I Epstein, IEPSTEIN at LINNLLC.com. Okay, give me some choices. I'll be choosing, and on Monday we'll start. Now remember, Monday is Columbus Day, Indigenous Day. It's got so many names. They change all these things. But you're not going to get any U.S. government reports because it is a federal holiday. Just remember that. Okay, so WBA down 1.93% for the week. You know how I've ripped up this company for lack of customer service, lack of the basics. They want you to be on time. They want their appointments. They send you text messages. And if they're out of COVID shots, flu shots, whatever they're out of, or if they don't have people on staff, they don't bother to call you. They don't bother to text you. Rather, they expect you to show up, wait 30 minutes in a line. It's terrible customer service. I called the national office. Did I receive a call back from one gentleman? I did. I told him I'd like to talk to somebody else about it. He assured me I'd get a call. I knew I wouldn't because that's how their customer service goes, and I did it. So, am I bearish on Walgreens? They have a new CEO coming in. I give them the benefit of the doubt, but if they stay the way they are, there is a reason this stock has gone from 55, you hit it, down to the $20 area. And that has happened in the course of since 2021. So is it a growth company? Depends. It'll grow if you got puts. When we take a look at the market on a higher high, lower low, now there's no trend, but it's a big break. The market can get a rally because it tends to do that. On these breaks, it tends to give you a pop back to the 18-week average of closes. Wouldn't surprise me if we get one. Where's the market? On the Bollinger Band. Remember, you only stay under that 5% of the time. You have a bearish embedded reading. So a hard rally in it until the red line's over 21, still short sales. So am I looking for the market to fail again? Yep. Market's not telling me it's changed. Now in Microsoft, we finally had a correction that if you think about what I'm going to show you, we went from the upper Bollinger Band peak up here to a Bollinger Band bottom. Why is that important? 95% of the time, the market will trade within this algorithm. Now, there's other parts to it that people use. I sign up for John Bollinger's services. He uses on-balance volume and so on. By the way, on-balance volume, Joe Granville was the granddaddy of that. I used to have him on my TV shows. I got signed books right here from him. What a wonderful showman. I don't know that he was that great of a technician, but he made some calls that got him ultra famous in the marketplace. But people use that. They use all kinds of services. They use all kinds of old techniques. They come together. I created one from John Bollinger with the Bollinger Band, but I tied it together with George Lane, slow stochastic, and then I threw my own twist into it, and I'm more than happy with the results. That's in my enhanced Bollinger Band course on our website. So when you're on the website looking to get into everything, look under the word education, you'll see that right there. Might as well mention that. The resistance in Microsoft, 330.59. Even if you rally through this high, all you do is you negate the downtrend. You're oversold. I don't think you're attracting new short sales against that number. That's the point that I'm making. In KRE, regional banking, the problem I have with regional banking, all of them, is the higher interest rates are going, the more problems for these banks. They got to pay out more in deposits. Can they lend enough to make up that difference that they're losing on a portion of that? They're going to keep paying that. Now you'll say, well, they keep a bigger percentage. They do, but their capital cost goes up. Okay, they're getting it in order to attract money. If you think of how it all works, and that's been the problem of some of these small regionals, and that's why I am so surprised we don't see more M&A going in to that field, because capital costs a lot and it makes sense. Hasn't happened yet. Is the market still bearish? Absolutely. Is the market oversold? Yes. Do I think it'll attract a lot of attention back at the 18-day or 18-week average of closes, the red line? Not really, because it's oversold. In fact, most markets are oversold right now. Look at the Chinese market. Now we're going to get a play here. The golden week just ended. So next week, people, in fact, starting this weekend, people get back into their office, they start their work. Now the question is, what happens here as the market catches up? Do they start buying more metals? Do businesses pick up? What goes on? We've come down to the point where the market's gone from an upper Bollinger Band to a lower, went back to the 18-day average, came down, and it's oversold. It's also trying to get a pop. So the question is, on a pop, until you're over the red line, the 18-day average, the bias stays down. In the industrial sector, this has been a terrible part for the market. Now, are we going to finally see, the Richmond Fed, the KC areas, Chicago? What's going to happen with the industrial activity? Is it going to pick up or not? We seem to be hiring a lot of people. They're not all in service. They are, don't get me wrong. There's a heck of a lot of them going into leisure and service. We see that in the numbers. And maybe I'll include that report in my full research tonight so people can look at it when I put it out over the weekend. I'm not going to do it tonight. But when I see that, I go, okay, maybe industry can come back here. And we just got down and challenged a major number. We held that number before, the 100-week average, in that zone. That's what you look at. You're holding the Bollinger Band in that. Could this be an area for a pop? Here's what it's not. It's not an area when you're oversold that I'm going to turn you and say, oh, I think new selling is going to show up. I don't think so. XLE, the energy. So here's that correction down to that 18-week moving average. You lost your embedded reading. You're at the target number. You don't have to go any lower, but you're also not bullish anymore. In UUP, continued bullish. Am I surprised that you finally are getting a reversal right here? Zero surprise. Why? You're up at the upper Bollinger Band. Now, what can happen in the dollar is a big surprise. If the red line closes under 79, you open the door up to get back to 28.71. It's not a lot in money. It's only $1 in money. But if the dollar comes down, that lifts a number of goods, be it the grain markets in the United States, gold market, the pressure comes off. There's a lot of things you have to look at. So this is very important in looking at that. Speaking of the gold market, you're now down to the 200-week average of closes in here. Now, gold got a break in the sense that if the dollar does peak, off of all this taking place, you're so out of it under the Bollinger Band and the 100-week average that you could easily get a bounce back to it. Am I bullish? I am not. Let's understand, not bullish. The Fed hasn't gone away from fighting the inflation scenario. If anything, the big argument's going to be, do they go another quarter point because of this number? You can't answer that, in my opinion, till you see the CPI number next week. If the CPI number is up and jobs are up, why wouldn't they go a quarter point? Doesn't make sense that they wouldn't. This week's very important. So I look at that and I want to see what it does. Would I be telling my clients, go in and sell this down here? Never. First challenge of a 200-week average, that's a 4-year moving average. Well, once we got over that number here, it has taken you since November to come back down and challenge it, almost a full year. I think I'll wait. Doesn't mean I'm right. In the minors, with the GLD's no good, what do I want you to buy GDX for? I don't. Tell me that you're coming out of the... Show me that the gold's good, and then the miners have activity. Tesla. So in order to get their numbers up now, Elon Musk, decided to cut prices again today on 2 of his cars. You know, I'd like to know from you something. You can put it out on our YouTube. How many of you have bought a Tesla? And I'm sure there's a lot of you. And then he immediately cuts the price. How do you feel about that? I mean, it's a brand new car. Now it's another 2%, 2.7 to 4.2% reduction. Do you reach somebody, because there's no dealership, there's a showroom. Do they give you money back and you go, had I known this, I'd have waited? I don't know. Nobody's talking about it. I'd like to know what people think about that. All right, but here you are fighting a big battle right through here. And remember, he can do this because of the volume and he's profitable. The other car companies aren't profitable. You saw Rivian come apart at the seams because now they got to raise $1.6 billion and they're going to possibly dilute their stock again. Uber has come down to a point where it's going to fight a battle, the 18-week average of closes. While the trend is down, the bias is up. No, I think it's sitting. Now, all these people that are working, are they taking more Ubers to get around? I want to know that. You know, in New York City, I was watching Steve Leisman today from CNBC, and they had him in the room, and he said something that I didn't realize. They said, Steve, we'd love to have you here more. I don't know if he went to New Jersey to their office or if he was in Manhattan. But he said, I don't want to pay that tax to get it back into the city. Remember they have that, we're getting it in Chicago, they're trying to do it eventually, where you have to pay a tax on certain days and times to get your car into the city. London's had it, other places get it. Interesting when you hear those things. DRI, Darden Restaurants. There will be a number where it will find a low. Could it be that we're headed to the 200-week average? But this is a market, I think they're in bed with Walgreens. This is a market that went from 176 now to 136. I mean, it's straight down. I'm guessing people are eating out at Darden restaurants and then going to Walgreens and being frustrated. Google. Higher high, lower low, fighting the battle right through here, and that's where we're at. So, just to bring you back into the fold, I want to remind you, if you want to see the stock report, it's all about seasonality, what has happened historically on a 30, 15, and 5-year basis at exactly this time, carrying you into the next month and a half, 2 months. Want to see what it does? Move your cursor up here. It'll take you to the area, or go to iraepstein.com under the word research. And if you're interested in learning on this Bollinger Band way that I was talking with, my enhanced Bollinger Band course, while on the site, go to that area under the word education. You have a great weekend. I'll catch up with you all Monday.